Legends, welcome. Oh, I better get this screen going, shouldn't I? All right, welcome to the Daily Buy Show, where we go through all things crypto related, all markets as they relate to crypto. Let me just get my screen active. That's better. Okay. There we go. We are live. We're up and running. Hope you're doing well. It is Friday the 29th of November where I am. Saturday the 29th of November where I am. I'm guessing it's Friday night wherever you are. Hope you're doing well. Hope you had a good Thanksgiving if you're a part of that side of the world that celebrates. So let's dig in. We're coming into the weekly close. Well, we've just had the traditional markets weekly close. And we're also coming into the monthly close, right? November's ending out. December, we potentially have catalysts, liquidity catalysts for markets. And when we have liquidity catalysts, if they come to fruition, it usually means the market rallies. So we're going to dig into those liquidity catalysts and just do a quick update on what they are and what we're tracking to specifically see them in markets. And now, for anyone who's new to my channel, or if this is your first stream watching, I want to just start on my Bitcoin bias so you understand and don't get confused when I talk about a potential rally, because right now, Bitcoin is actually bearish. The structure is bearish, and all of my signals that I track to indicate to us that Bitcoin is either already in a bear market or heading to a bear market have triggered, okay? And one of the main signals, now I won't go through all the signals because I have done that on many of the past streams, so you could pretty much jump into any of my past streams and you'll be able to see in detail why Bitcoin is bearish in my view currently. But just quickly, the main signal that I track and the main way that I look at markets is in terms of market structure and whether so when a market is bullish, it makes higher highs and higher lows. When a market is bearish, it makes lower highs and lower lows, right? So hence it's either moving up or down. And when it's moving sideways, that's often called consolidation, chop, or a range, right? So we can see here in bull markets, higher highs and higher lows. Now, when you look at weekly market structure, Bitcoin never turns bearish on the weekly unless we're heading into a bear market. Weekly structure, I'm just going to draw it from here really quickly. Here's the new high. Here's the high that was swept. So this indicated massive weakness for us. Okay, and if you've been keeping up with my X and my channel, I've been flagging this for quite some time now, well before this sell-off. This suggested to us that we don't have the buyer momentum and demand to push into new price action. And when we broke this low, we've started to create weekly bearish structure. Okay, so right now, my position is there are liquidity catalysts aligning that can potentially drive some bullish price action and drive a rally into December, possibly January, and Q1, because there are some other signals aligning, but I call this a counter trend rally, and it's counter trend because the current trend is bearish like this, but when price moves in this manner, these retracements, okay, these bullish legs of price are counter trend, okay, because the trend is going that way, so they're going in the opposite direction of the trend. Hence, I believe if you look at weekly structure now, see how we've had this massive sell-off to confirm that we've broken the bullish structure that was holding up this weekly bullish trend. What I believe we're shaping up for with the catalysts, the liquidity catalysts on the horizon, is one of these legs here, where on the weekly chart we move higher, okay, and wherever Bitcoin finds its next lower high, it's then going to turn over, right? Now, I can't forecast or predict, and I don't think anybody can forecast and predict when this high is going to come in and how much lower we're going to go, right? And you'll have many people screaming at you from many different parts of the internet and everywhere else that it's going to top here, it's going to bottom here. And to me, that's all speculation. Where I find my success is observing the charts, observing price action, observing the data, and letting that dictate how I react in markets and how I respond in my investing and trading. So the game of investing and trading, right, is trying to work out where's this high going to come in and where's that low going to come in. But the beauty about price action and using technical analysis to help you make those decisions is that you can observe key signatures in the way that the price moves and in the behavior on the chart. Hence, I hope that just lays out a quick context for you that the liquidity that I talk about and the potential liquidity catalysts that I discuss in this stream are to create one of these legs in this weekly downtrend, and I expect it to turn back over. Okay, and then as the market develops in price action, we'll see if this happens, and it's always an if because I can be wrong just like any other trader or investor. If this happens and we turn over, we'll analyze price and we'll analyze what it does down here, what it does along the way, and if we're potentially going to see signals of it turning over quicker or if it's going to come lower. That's all part of what we do here on the channel, right? So let's go back to those liquidity catalysts. Now, I posted on X and I've been discussing this in the stream, and I'll keep discussing it because these are the things, as an investor or as a trader, these are the things that we're monitoring and tracking that drive the volatility in the markets and typically can drive the price action. Okay, so what have we got? We're coming into the end of November, so positions potentially unwinding, potentially profit taking, all of that sort of stuff happens towards the end of a month. And as we come into a new month, a lot of those things happen as well. You get new funds, new participants, new traders, investors, all looking to position for how they want to trade the month or the next 2 months or the 3 months, whatever their time horizon is. Hence, around the month end and the start of a new month, we're going to get volatility. Now, we're going to see increased volatility right now because of seasonality as we come towards the end of the year. Typically for risk markets, especially crypto, Q4 and Q1 are the two of the biggest returning quarters of the year. And we've got these catalysts coming into the end of the year where we are expecting our next rate cut. The market, I should say, is expecting a rate cut in the second week of December with 86% probability. Okay, now this rate cut trajectory has been very volatile, and I do believe that even with this rate cut, it's still going to keep rates quite high as compared to previous bull market environments. Hence, it's another signal for me that we're not in a bull market right now, and we're potentially, I'm talking specifically for crypto. I'm not talking about equities and other markets, because again, if you watch my previous streams, the way that these markets cycle and trade, equities will stay bullish for longer than crypto will stay bullish, right? So crypto will turn to its bear market and will give off or pivot into bearish price action historically quicker than the traditional markets will. And hence my focus is on the crypto markets, right? So this rate cut, we've got this rate cut potentially coming in for December, and that is a short-term liquidity catalyst, and that'll be in the second week of December. So usually leading up to the FOMC, where they announce the rate cuts and make it official, or rate hikes, or whatever they're doing with interest rates, you get a lot of volatility going into that week and coming out of that week. So the next key catalyst we have is QT ending. Now that's quantitative tightening, which basically means that the Fed has been reducing its balance sheet. Okay, so just in a nutshell, what that means is the Fed, when it's reducing its balance sheet, so see when the balance sheet's running off, it's making, it's contracting the money supply. So it's not stimulating the economy. It's not stimulating, how should I say this? How can I say this in the least confusing way? So it's not stimulating the economy to encourage growth, essentially. So it means that when they're running off their balance sheet, I'll put it in a nicer chart here. I've got it here, right? So when the Fed is reducing their balance sheet, they're not increasing the money supply. Well, not aggressively anyway, right? So what we want to see is what's called quantitative easing, QE, and that's when the Fed increases its balance sheet. Because what that is essentially money printing, okay? So when the Fed prints money, they expand their balance sheet, and that's what triggers massive rallies and bull markets in risk markets. Because when there's more money in the system, investors are more willing to spend on growth as well as chase higher returns in riskier assets, right? So hence that's the next key catalyst, because QT ending, so the Fed has been reducing its balance sheet for some time, and they've announced, or there's speculation that they're going to be ending balance sheet reduction in December. Now we can't mistake ending balance sheet reduction for QE, meaning expanding the balance sheet. So we'll have to watch it in the data, but at the very least, it should stop draining liquidity if the balance sheet levels off like this. And our best case is that it increases. So we're still tracking that. Now, we did get some data come in, and it looks like the balance sheet's flattening out, right? So we got data yesterday, and it looks like the balance sheet's flattening out. So that's good for net liquidity. The other thing we're looking at is the government, the TGA, which is like the government's wallet that we can track. It's been refilling, which means they haven't been spending, and we got new data that came through. Now I'm looking at these directly on the Fred site, which is the government site, because for some reason TradingView hasn't updated the data yet. Hence, we'll just track it here, and we can see every time they get close to $1 trillion in their wallet, that seems to be the amount that they're trying to save to, and it looks like it's starting to turn. So if I just drop down to the 1 year, it looks like it's starting to turn. And why we want to see it turn is because as it comes down, it means that the government's spending again, right? And when the government's spending, it stops draining liquidity from the markets, and it can act as a liquidity catalyst, like fueling markets, right? Hence, we're tracking all of this. I've aggregated all this and some other data into our net liquidity indicator. And again, just quickly, what we want to see in net liquidity, we want to see it ticking up, because that means the supply and flow of liquidity coming into markets is increasing. And you can see when we get these expansions in liquidity, we get the expansions in price action. Hence, over the next 2 weeks, now where we at? Month end, next week we're going to get some payroll data, and then the second week of December we're going to get the rate cut. And I anticipate over that next 2 weeks we'll be able to see more data on the Fed's balance sheet. So we'll be able to see if they're actually ending QT, and if it's actually making an impact on their balance sheet. And we'll also be able to gauge what the Fed says, and if they announce that it's been ending, and basically we'll see it all in the data. All of that's going to come into fruition over the next 2 weeks. Hence, it should drive the volatility in markets, because if the liquidity catalysts appear in the data, we should expect bullish price action to potentially lead, or at the very least follow, because liquidity drives the markets, right? I think that's pretty obvious from all of what I've just talked about. Now, as always, price action leads, right? So if the liquidity is coming into the markets, I'm not going to be front running the impact in the charts, because the price action and how Bitcoin and the crypto markets respond will tell us what we need to know in terms of if the liquidity is even meaningful or not. But our anticipation is that we must be ready, because we are getting signals and broader market signals that we are due for at least a relief bounce in crypto. And that relief bounce could potentially be, based on this liquidity, a big counter trend rally, right? And based on historical precedents in the way that Bitcoin moves. So we'll just do a quick round the grounds on the charts. Legend, Richard, there he is. Welcome, Legend. Good to see you as usual. Hope you're well. So let's do a quick round the grounds. Spreads, nothing really to see here on spreads. And remember, I track the US 2-year yield with the 10-year yield. I track the spread because it typically indicates to us the market's sentiment towards risk appetite. Because when the spread's increasing, the market is expecting easing conditions, right? Which are more suggestive of growth in risk assets. But when this spread is declining, it usually means the market is having recession concerns or concerns about future liquidity available to markets. So again, like if we just put Bitcoin on with this spread, you'll see that these major moves, so as bear market, you'll see that these spreads were heading down, right? And even just throughout this cycle, when we get these increases, it's typically somewhat of a lead on where the risk market's going as well, right? So we're in this range in the spread. If this range breaks down, then we got to expect that Bitcoin's going to follow, because that's the market basically telling us that they anticipate liquidity conditions are getting worse and tighter and potentially recession concerns. So if that's heading down, then Bitcoin is going to likely head down with it. Right. DXY is the important chart that's on our daily scan list right now. We're still observing the cycle ending pattern. The pattern hasn't been invalidated yet. If you want to know what this pattern is, just check my X or just go back to yesterday's stream. I explained it in detail. Now on the daily, we are seeing some resistance here at the structure high. Now just to quickly recap what we're looking for in terms of supporting a relief rally, or at least leading to some type of relief in crypto and the risk markets, is for this to continue trending down to at least below here, right? And down towards here. Now this cycle ending pattern won't be invalidated until we have a couple of key things. We need to be trending below here, and we'd need to be below the weekly bands again, and them turning green. Them staying red, right? We don't want to be above the bands and the bands turn green, because you can see here historically, when my TT bands turn green on the weekly chart, it's beginning a macro trend in the DXY, which means the US dollar, it means that basically investors are flocking back into the US dollar. When they do that, they're not putting money into risk assets. So you can see here, as the US dollar, which is represented in the DXY. The DXY is just a basket of currencies against the US dollar, right? When the DXY is heading up like this into a macro bull trend, it means that the market is leaving, participants in market are either taking profits or moving to the dollar to go risk off, right? So you can see it here, they move risk off. Bitcoin is moving risk off. When they start getting out of the USD, the money starts pouring into risk assets. Okay, so hence we're still on watch on the DXY, and we still potentially have a signal here as long as it keeps going down to support that at least relief bounce or counter trend rally. Bit of chart hygiene before we move up, hey? Got to keep the charts clean. I'm well, thank you, Rich. I'm always good. I hope you are over there in UK, yeah? I'm pretty sure you're in the UK. We talked about gold recently, yesterday, and gold and silver is bullish, right? So had another decent push up overnight, right? Another almost 2% move in gold. We went through yesterday. If you're interested in trading gold, I also do trade gold. It's the only other asset that I trade outside of crypto. And it's creating these higher lows, right? This ascending triangle kind of pattern. Now, usually this is a bullish pattern, meaning the asset is it's had its pullback, right? And now it's being reaccumulated for another breakout potentially. Okay, so this is a pattern common. Now, I did yesterday cover all the key high time frame signals for trading gold, looking at the weekly and the monthly. So if you're interested in that, just check my last stream. Let's just see how, yeah, cool. As expected, bullish closes across all indices, all major indices that we're tracking. Again, if this is the first stream that you're watching, we were watching this test on the structure low. However, the higher time frames were still bullish. And we're seeing follow through after that deviation. This is just on DJI, but similar price action across the other indices. And the weekly, bullish, right? It's a bullish close for the week. So you anticipate from here the all-time highs are going to be tested, and that's the next place that we'll need to observe price action again, observe behavior around the highs to see if it's potentially a bigger rejection or if we're going to blast through and head higher again, right? Now, again, for the risk bid to support the counter trend rally in crypto, we track all of these signals because all of these signals, the more points of confluence that we can get, the more signs that we can align with that the market is showing us reasons to be bullish, we take, right? So the DJI, the SPX, and the NDX in particular, these markets need to be bullish for crypto to be bullish, right? There's the cycle ending pattern on the NDX that we're observing. And right now it's forecasting an end to potentially this bullish cycle around the end of Q1. So hence we're monitoring the NDX because if it rolls over faster, okay, quicker, then Bitcoin has less hope of a big counter trend rally. Hence, I like to see bullish price action across these indices because it is following historical behavior and it is aligning for my current thesis to be bullish in the short term for this counter trend rally, so I can get positioned on it and trade it correctly. RTY, lastly, wow, look at that. We've got 1, 2, 3, 4 bullish. Yeah, sure, we're getting some shortening candles, a little bit of momentum loss there, but we've powered out of that low. So that's great to see, because the thing I am going to be monitoring is if this starts giving a bullish divergence on Bitcoin, we've got that scenario where we're trying to work out, is Bitcoin leading or is the RTY leading? Is the Russell leading? So is the bullish divergence on Bitcoin a sign that Bitcoin may catch up again by way of counter trend rally, or if other broader signals align for us to be more bullish, then is that a bullish trigger, or is Bitcoin actually leading the RTY and giving a bearish divergence to tell us that there's impending downside coming to the RTY? So we'll keep monitoring that as we go, but right now this again is another signal that supports bullish price action in the short term. Now, futures shouldn't open because we're heading into the weekend. Yeah, it would have opened by now already. And Nvidia is the one that's a bit of a head scratcher at the moment, because it's still not really responding bullishly. And this is the one that we've got to be cautious of, because if it's providing a bearish divergence from the SPX, historically, when Nvidia diverges bearishly from the SPX, it meant we were going into a bigger, deeper correction. So if the SPX charges up and Nvidia makes a lower high and turns over like this, while the SPX has made a higher high, historically that means Nvidia was providing a leading signal on the SPX that we are heading into bearish territory. You can see it here, see high, highs, lows. And if we go back, right, you can see it here. Right. Hence, we're tracking that right now because we are seeing some type of divergence here. You can see it how Nvidia was down almost another 2% while the SPX closed up 0.5%. So that one's on our watch list. Okay. The rest of the Mag 7, relatively bullish, aligning as expected, because it kind of powers the NDX in particular, being the biggest market caps. Let's head over into crypto. Jump out onto the weekly. Our favorite chart. This is stablecoin dominance chart, which gives us a very important signal on crypto liquidity and what crypto participants are doing in markets. When stablecoin dominance is increasing, it means that crypto participants are moving into stablecoins, meaning they're getting out of tokens like Bitcoin and whatever other assets. It means that they're taking profits or they're exiting the market into stablecoins. When stablecoin dominance is pushing lower, it means that stablecoins are being deployed into crypto assets. So that's what you want to see to be bullish. You want to see dominance coming down. Now, we're at this key level that we've been discussing on almost every stream, because historically, when we broke the range high and trended bullish in dominance, we were heading into that deep bear market. However, we do have counter trend rallies along the way where dominance comes down, and right now we're seeing that rejection at the highs. So we're basically just monitoring. If we do get something like this, right, that would be a lot of crypto internal liquidity potentially deploying into markets, again supporting our counter trend rally set up for potentially December into January. Now, if you're tracking this chart, when you see it start to make moves above this high, that's where you need to prepare for potentially that deeper bull market. But as long as you're here with us, keeping up with this channel, we're tracking all these things together, and I'm here daily doing this stuff, hopefully to keep you updated on the markets. And I guess one of my goals with this channel is I do this 24/7. My whole life is geared around understanding what's going on in markets all the time. And I just see this channel as a way of others being able to leverage what I'm doing, because I know that you might not be able to spend the amount of time that I do in the charts and you know, investing and trading like I do. Bitcoin could be your passive investment vehicle on your 10 to 20 year horizon. It could be your retirement vehicle. Hence, I hope that you can leverage the work that I do to help you stay invested correctly in the crypto space. Or if you're trading and you're full-time in crypto like me, I hope I can teach you something along the way and even share ideas with you. DM me on X, get in touch if you are a full-time crypto person. Always keen to learn from others as well. But anyway, this chart's a really important one to keep track of, right? Bitcoin, let's go into Bitcoin levels. put our key levels that are already marked out. So we're coming into month's end. Actually, I'll turn these off for a minute again. Now, we're clearly, unless Bitcoin has some epic V bottom reversal kind of rally, we're clearly going to close November as a strong bearish close, right? Now, something I was picking up on when I was looking at the charts earlier today, when you look at the monthly chart and you just look back at the previous cycles, it usually has, in a bear market, somewhat of this three-wave, I think in Elliott waves they call it the ABC correction, right? Where you have this 1, 2, 3 three-wave correction, okay, which I think they call like ABC, right? I'm not an Elliott wave trader, but I've seen other really good traders that use Elliott waves. And the ABC correction is quite an interesting one because a lot of corrections do form like that, where it's just a three-wave pattern to the downside. And then when I was just looking at the monthly, it struck me where I was like, hey, let's see what we did in previous cycles on the way up versus the way down, right? And on the way up, you could somewhat, again, if you were, and also, again, I'll say I'm not an Elliott wave trader, so apologies to the Elliott wave traders if I'm butchering this. But when I just look at this, I go, okay, 1, 2, 3 is usually meant to be the biggest wave. 4, 5, so that's usually the expansion pattern, that 5-wave pattern. And then typically after a 5-wave, you get the 3-wave, right? And then if we look at last cycle, A, B, C. And often that C is that big capitulation, right? And then when I was looking at this cycle, you could probably draw, depending on how you draw it, you got 1, 2, 3, 4, 5, right? 3 being the biggest. I think I remember that being one of the main rules in drawing this 5-wave. And that could suggest to us that if we've got an ABC coming, right? A, B would be that massive counter trend rally like you see here, okay? And then C would be that capitulation like wave down here, right? And maybe then, yeah, C could be that, maybe that big capitulation. So it's just something interesting that I was just looking at when I was looking at the monthly chart, less about the Elliott waves, but more so what I was just looking at is how many major corrections, retracements do we get in previous cycle when we look at the bear market. And you get the one major correction, right? The major counter trend rally. That's a clear correction. And then you get down into this grinding final sort of capitulation kind of moves where you weed out the weaker hands and anyone who's hanging by their last strings, let's call it. So I was looking at that and just thinking about that, because if that was to play out and we are getting some type of end of our first wave here, again, we could see that second wave come up. Maybe we're going to retest October lows, but that's where zooming back out onto our quarterly, right? Now, you got to remember, if the bulls are to repair this quarterly candle in December, what do they need to do? Well, they'll need to recover the quarter Q3 low, right? Because if they want to close the quarter bullish, Q4, they need to get back above Q3's lows. Hence, if we then go back out to the monthly, right? Is December and January, at least is December the month where we potentially get that counter trend rally to find resistance in the Q3s? Because I imagine if we get back to here, especially in December, I imagine this is going to be a massive resistance, because this is where the bears need to hold to ensure that this quarter ends bearish, and this is the level that the bulls need to reclaim to at least invalidate this quarter ending bullish, right? So hence that's why I've got that still as a key level on the chart for me, because I'll be watching that and how price action develops into that level. So we are clearly going to close bearish from in November. Unless, look, anything can happen, I guess, unless we go crazy this weekend. So that's just what I'm observing there. And closing bearish, sorry, just last thing I should say on that. If you observe how these big bearish moves play out in the candle behavior, if we have such a strong bearish close, like this, and the inverse on the bullish side as well, it's not often that you're just going to get the next candle to be this, right? To just be an epic bullish candle, right? Or even retrace all of that move. Like, that happens more often, but usually on the much lower time frames, you might see that where you get that big retracement. But quite often, if it's a pivot, right, and you can see it right here, you get the massive bullish close, okay, because you get that influx of sellers, right? Call it that main participation or first participation of sellers. Like, someone big has been offloading positions to move the market so heavily down and create such a bearish candle, right? And then if that person, or if that culmination of big capital is done, then what we should see is the next candle should be weeding out kind of like the weaker hands and potentially some of the retail who thinks that it's going to go lower and start maybe puking positions. So hence, again, you'll see here, you'll see the next month, if we want to reverse and become bullish, you'll see some type of compression or consolidation. And one of the triggers we want to look for is, I mean, you guys know me if you've been watching my videos, I always look for sweeps, because what sweeps tell me is either exhaustion from one side or heavy demand from the other side, and sometimes potentially both, right? So if we get, right, December, a candle that looks like this, that's starting to compress, it's starting to wick, right? And we get a sweep of the previous low, then that could set up January to be more of a bullish candle, right? So that's just something that's on watch as we come into month's end and we come into quarter's end. So I'll delete this because we've already got all of our key levels up here. Let's just take a quick look at price heading into the end of the weekend, and I think we'll call it there for today's stream after we look at Bitcoin. I'm thinking maybe on tomorrow's stream, we'll focus a little bit more on altcoins and rotational stuff. Maybe a little bit more technical trading, just to mix things up a bit before we head into a new week. Now, Bitcoin on the weekly, we've potentially got an inside bar developing, right? And if you just remember, just the same sort of patterns and signals that I described on the monthly, we've had this 1, 2, 3, 4 weeks of straight bearish candles, like solid bearish closes. We've got an inside bar which represents some type of compression and consolidation. This is ranging. If we go on the lower time frames, we're within some sort of range here, potentially playing out. So, you know, I'm really, when I see these inside bars and so when I see these inside bars, I'm really just observing what happens at the extremes of the candle, okay? And the fact that we're coming into somewhat of a sell-off, we've got some context building around a potential rally. We've got our volatility window over the next 2 weeks. I wouldn't be surprised if we do get some type of choppy behavior over the next 2 weeks. And then what I'm really looking for, the key signature I'm looking for to confirm a lot of the liquidity catalysts or reject them, is if we get this chop, right? And then we get sweeps of the highs and heavy rejections, that might suggest to us that we're going lower and we're potentially putting in that weekly, that new weekly high even lower, right? And also suggestive of the liquidity catalysts not being sufficient to drive liquidity. Whereas if we get the chop, right, and we're basing and we get the sweeps into the lows, right, this sort of behavior that aligns with the liquidity catalysts, right, that would tell me that, again, there's potentially demand stepping in aligned with that liquidity. So that would support some more bullish price action. So hence this volatility window, I'm watching these weekly candles and the daily candles and the extremes of the range to see that's where we're potentially going to get our move to either direction. And again, until further price action develops, whatever move, whether we go lower first or higher, I'm still in the camp of expecting lower at some stage, until further price action develops to suggest otherwise. Daily, let's see how we closed. All right, so now we've got to add some caution to today, because a couple of things to look at is I did a pretty lengthy session yesterday on how I look at market structure. Also, if you go to my building block series and look at the video on market structure and drawing market structure, you'll understand a lot more of what I'm about to talk about. But we are now in sufficient territory for price to confirm this as a lower high in the daily structure, okay? And now we are starting to see initial signals of some potential momentum loss and potential pivot for the reversal, because previous day high yesterday was swept, okay? So what do we need to see for to confirm this as the high, as the new high? We need it to come down and actually touch the low. As soon as it touches this low, this is now the new confirmed daily high. And if we're trading back above that daily high, then this daily is bullish again. But if we're just analyzing price here and we're considering that we may be in for some volatility, well, we might have what's called a complex pullback develop, where within the current structure high and low, we might get, cool, we got some momentum loss, but I'm also looking at this recent buy side order flow, the fair value gap, potentially our two red candles, white in the instance of my chart, but our two bearish candles are something like this, and maybe it wants to keep going higher, right? Creating internal structure. This would be a complex pullback, right? So it's still bearish on the primary structure, but internally it's bullish, meaning that it could be a reversal in play, but it could just mean the market's generating more liquidity for a move lower. We don't know. We just got to analyze price as it develops. So that's what's on watch right now for me, is we've got our first red candle, right, in this leg up. Is that actually a pivot coming in? So I'll be watching that today, and we'll be able to report on it again tomorrow. We jump on session. Let's look under the hood on the lower time frame. So we can see that internally the 4 hour is bullish here, and we've now created this low that created this high. So this is our 4 hour internal low, and it's just been swept, okay? So we need to see if this sweep leads to anything, right? We've got an inside bar here on the 4 hour. We got some compression. We need to see if that sweep actually leads to a new high, which then makes our new low here, right? It has only just swept our 4 hour primary, right? So this is the 4 hour level that we need to reverse on the low time frames to make the 4 hour bullish, okay? It has had a minor sweep on that 4 hour. So over the course of today's price action, I'll be watching what type of PA we get into here, right? Because if we do get a strong move down, some nice candle with some gaps, then I might be interested in a short setup on the very low time frames. Okay. Now I've said I wasn't really going to talk about the low time frames too much on this channel, but I guess I get too excited. So let's not zoom in any further. Rich, we can chat offline on X, etc. To go into that kind of stuff. But anyway, Bitcoin, we're coming into our first key levels, the yearly open, and we've got this weekly fair value gap. So we are expecting resistance into these key levels, but we'll be mostly monitoring over the weekend to see how price develops. That's pretty much it for today's session. Right. Where are we at? Yeah, that 10:49. Been on here for about 50 minutes. That's pretty much it. If you have any feedback, drop us a comment. Anything you want me to look at in future, whether it's altcoins, whether you want me to go into specifically trading, like trading strategies or systems that I use, or bull market price behavior, bear markets, all that kind of stuff, just drop it in the comments. And please give us a like, subscribe, follow us on X, all that kind of stuff. I appreciate you joining. Thanks, Rich. Good to see you again. I'll speak to you soon, legends. Take care.